It has been a wild 6 months in the markets. Tariffs, inflation, wars, and many retail traders got hit hard. So let's show how my portfolio held up and how the average trader performed. What is going on, everybody? Welcome back to another video on the Rookies Bull Run. I know it's been a minute since I made a video, but today I'm be going over and breaking down how the average retail trader performed so far in 2025 and overall in the past 6 months of when I started investing. Now there's a lot to learn in this video. I hope you guys can sit back and enjoy and show you guys how we've been doing. Okay, so without further ado, let's get right into my Robinhood portfolio. All time I am down 11%. It's not pretty, it's not nice, but during this whole entire experience, my portfolio was down a whopping 33%. April 8th, that was Liberation Day. At the peak fear of tariffs, all the news and the headlines, people were freaking out over the market. Thought we were gonna have an economic world crisis coming up. And I was like, I'm not selling anything. Why would I? I think it's gonna go back up at a certain point in time. Why would I take a loss just because of this? So I decided to hold on to every single position I held throughout all of this. And what do you know? I got to beautifully witness a nice, near perfect V-shaped recovery. Now, we are going to war with Iran, and the US is stirring up some things, and the market's gaining a lot of volatility right now, which could send us lower again. But again, I'm fine with that because I'm holding these longer term. So let's go over my investments real quick just to show you. Obviously, I have all the stocks that you guys saw I've been holding before: Palantir, Nvidia, Amazon, AMD, Google. You guys can pause the video here. Actually, let me move this so you guys can see this better. And a new investment I actually took, I'll just throw this into the video, is called Circle. I bought 3 shares at IPO, and I got it for like $31 a share. And since then, it's been 2 weeks. I'm up about 600%, which is absolutely nuts. I don't even know what to say about this. This stock is just moving and non-stop. Like, it hasn't stopped growing. I'm up 692%. In the past month, which has only been like 2 weeks since IPO, it's up 692%, which is what I'm up. But I don't want to get into too many specifics. Those are my positions. I did DCA, which means dollar cost average, into a few stocks during the whole tariffs and Liberation Day because I knew that I can get some good picks. So with the little money I had left to invest, I was slowly buying into Google and Amazon. Great stocks to own in my opinion. And of course, my cryptos. I don't really know what to say about this. I bought these cryptos in November. I bought them when everyone said, oh, bull run, 10x your money. And yes, I am a retail average trader. So I was like, I'm buying up. And I'm getting absolutely demolished. See, my stock portfolio is actually beating the S&P 500 by about 5% year to date, which is pretty nice. The only thing that's truly destroying my portfolio is my crypto. And what am I doing about this? I'm not doing anything. As I mentioned, I'm holding because, whether I have to hold this for a year, 2 years, 3 years, or 4 years, the money I put into this portfolio account did not need to be touched within the near future. And that is why I took a riskier play with part of my money. About 50% of my portfolio has went into crypto. The other 50% is into stocks. So that is the little update I'm giving you on the Robinhood portfolio. And now I want to tell you guys several lessons that I've learned because I think that they're super, super crucial for all of you to hear. Firstly, the average retail trader chases the green candles and runs away from the red candles. That is not what you're supposed to do, in my humble opinion. Remember, guys, this is not a financial advice video. It's just me telling you my experience, what I've learned, and how it's going. Many people decide to buy the news, but little do they understand that is all priced in. And the second you, the retail trader, buys a stock after hearing the news, it gets dumped on. Why? Because all the big institutions, all the big money plays, also known as smart money, they already knew all of that. So they bought it in anticipation for you retail scrubs to buy it up. And that is how people get destroyed. They buy things at the top, the institutions sell off, market drops, retailers get scared, and they decide to sell their position, and then the cycle repeats itself. What you have to do is you need to buy in times of fear and sell in times of euphoria. I think Warren Buffett has a quote. Maybe I'll put it up on the screen somewhere. But it's essentially that. You need to buy when people are fearful and sell when people are excited. Because if you're buying on the red days, that was my strategy with Google and Amazon. I was buying a stock like every other day or every 3 days, whatever it was, when the stock was down. I was buying it when it was at its low point. Firstly, to give me a great average cost. And secondly, to always ensure that there's a lot more room to the upside. So on Google and Amazon, I got great average costs because I was doing this DCA method. Again, dollar cost average, where I would buy a share like every other day and just to build up my position size that way. So that's lesson number 1. So lesson number 2 is actually super crucial, and I only figured this out a few months ago, surprisingly. But throughout my entire investing journey, I was watching tons and tons of YouTube videos for a few reasons, and I can tell you them, and I'm sure you can relate. A, I wanted to watch the videos because I want to know what's going on. My portfolio tanked 10% today. What's going on? I got to see what's up. Or B, my portfolio went up 10% today, and I want to know what's up. Do I got to take profits? Are we in a good position? What's the deal? Or C, I want to see how everyone else is doing compared to me, right? So I consumed tons and tons of YouTube content. I was watching videos every single day, got home from work, put on YouTube, watch and see what's going on. And it really showed me something very, very important. I saw the entire narrative of the market. And I kind of got a whole sum of how this game works. Because let me explain. 9 months ago, I was watching videos. Oh, we're in a bull run. Buy your stocks, buy your cryptos. It's going up. And it was true. I saw crazy growth. If you see on January 17th, my portfolio was up 15%. That was only about 3 months after I really started investing. I was up 15%. That was extraordinary. And what happened following that? We tanked. And I saw on YouTube the videos to reflect that. Market's crashing. Sell all your positions. I saw the whole narrative. And I think a lot of people take these videos too much to heart and they just listen blindly and follow like sheep in a herd. I told myself, why would I sell? I don't want to lose money. I'm not losing any money right now. So I didn't sell anything for that exact reason. And because of that, I was able to save. Well, not save, because nothing is a loss until you sell it. But I was able to recuperate and see this V-shaped recovery because I didn't just listen and follow along like every other retail investor. So that's my second important point. Make the right decision for yourself. Don't let all this content, news, and media shape what kind of investor you are. Sure, if you have bad positions that you want to remove, okay, I can understand that. But to me, this was all caused by political news and other, geopolitical factors. And to me, that's not a reason to sell. Yeah, it might just postpone all the gains I wanted to experience, but it doesn't mean it was taking them all away. So for example, my Tesla position. Tesla has been a ride of volatility, going up from 365 back to 270, during the whole Trump versus Elon Musk beef. That was a wild time. It was only 2 days where Tesla dropped dramatically from 353 to 299, even lower. It didn't even show here, but it went down to 275 that day. And we recovered and we're back to 322. So my point is, you have to understand that this is something you sign up for. There's volatility and you cannot let these small things affect you. Because again, Tesla, I have this as a long-term holding position, right? And by the end of 2025, I think Tesla is probably going to be a $400 per share. But that's my opinion, and I was okay with holding on it. But I will tell you, I plan to de-risk a little bit, right? So my Tesla position is down 11%. When I get to 365, which is my near break-even price, I'm going to be selling 5 shares. Why? Because I want to be able to buy back at a cheaper price. And that moves me to lesson 3. The experience you gain as a trader really helps you see what kind of investor you are, what you want to be, and how you should trade with that new mentality. Now, what do I mean by that is when I first started investing, I was just buying stocks that I wanted to hold. But I never realized okay, markets can really go down and then they can really go back up. So what did I do? When I bought Tesla and it was dropping, I was still buying it at higher elevated prices. Now I've seen how low markets can go, and I understand that, okay, if we recover all the way to 370, we're probably going to have another pullback back down to the 320s. So let me sell some of my position at a small, tiny gain, and then buy back at cheaper prices with the money that was already in Tesla. And that's the third lesson. Learning how to de-risk and evaluate your positions to make them better and more efficient to reap more rewards. So a few more points. A lot of people trade with emotions. This is a super important lesson that every person needs to understand if they're investing. You cannot say, oh my god, the stock is up 50% and I didn't buy it, let me buy it now. And you cannot say, oh, this my stock is down 30%, do I sell it? You cannot trade like that, because if you do, you're falling right into the hands of smart money. You need to keep your head level-headed and make right decisions. Okay? You have to make sure you have good risk management, because if you ignore that, again, you'll get destroyed. And obviously, you need to be able to adapt to the volatility, because there's a lot of opportunity when you have volatility, right? And you have to play your cards right in order to make sure you do well. So, something I've learned as well is that patience is underrated. To be an investor, to be a trader, you must have patience. If you, for example, say, I'm going to buy this stock when it goes to $10 and the stock is at $11, yeah, you might say, okay, maybe I should buy it here. But sometimes you have to just hold true to yourself and say, no, I said I'm getting into the stock at $10. I'm not going to wait any less time until it gets to my price target, and then I'll buy it. That's how you make sure you adhere to your rules as a trader and you make good, smart decisions. You also don't need to catch every move. Sometimes people see, oh, I missed this 20% move, let me get it now. For all you know, the move was over and you're gonna get dumped on the second you buy it. Don't chase the green candles. Now, another important thing, you should consider cash as a position. And I know it doesn't really make much sense, but you need to have some kind of cash in reserve in times to buy. Now, I'll be honest, I didn't really do that well enough, so I kind of dipped into my paychecks and decided to put a little bit more money into the market. Okay, you need to understand that. You need to have that set out for yourself, how much money you can invest. So things I'm doing differently now is I'm kind of learning how to de-risk, like my Tesla position. Once I get to break even, I'm going to sell a few positions, buy it back later, because, well, I want to have a lower average cost. But I still want to have the same amount of capital in Tesla. There's also a lot of mindset changes that I've had. I can tell you with full certainty, on April 8th, I was freaking out. I was so scared. I was like, oh my God, I'm losing all my money. But I just told myself, wait, don't do anything. Don't do anything dumb. Don't make any mistakes. Don't sell. Hold off. It's not a loss till you sell it. And it's also not a gain until you sell it. And people need to understand that. So my goal right now is to kind of just keep riding this wave, seeing how my investments go, and really just showing you guys every single step of the way. So let me know how you guys are doing this year. Are you up? Are you down? Are you just consolidating? And this is a real investing journey right here, and I'm trying to show you guys everything there is. So subscribe if you're excited. Subscribe if you're investing with me in 2025, and I'll see you guys on the next one. Peace. Side point, not financial advice. Hope you guys did learn a lot from this video. I'm trying to save every single retail investor out there because I got destroyed, and I don't want you guys getting destroyed. I'm showing you everything I did, everything I learned. Have a good one.